Welcome to the Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bobby Iaccino. We did not coordinate wearing our tightest t-shirts today, but when we have them on, you know that it's business time. Thank you, guys.
Go time.
It is go time. Thank you guys for tuning in. It's one of my favorite shows to do just because of the live element to it and all the support we get from you guys. Our hat is off. Thanks to Tradier for being such fantastic host. Bobby, what do you got?
So today, as we get closer to the exact holiday weeks, it gets harder and harder to book some of the big name guests we like to have. We may or may not have one next week. So what I thought we would do, I did a grok search of some of the biggest financial posts of the year. Some were dated early in the year and they were predicting second half of 2025, which I kind of like to glance at those and get our thoughts on those, see who was right, see who was wrong. And then also some of the biggest predictions, tweets or posts, whatever you want to call it, going into 2026. Now, before we do these, I'm going to put them up on the screen. Some of them are going to be too small to read, so I have them on the side here as well so that I can read them and Jim and I can give our comments on them. If you guys have comments, feel free, like always, to chime in.
By the way, are we going to be dogging? Are we dogging people, Bobby, or is this mostly going to be supportive? Because I remember a lot of bulls.
It's mostly supportive. Like, I don't want to dog anybody. I just want to kind of point out when some people were right and point out when some people were wrong. I don't think that's dogging them.
No,
people point that out with us all the time,
and we want that. I have no problem with people telling me I was wrong. It's part of being.
Last week, for example, we had Shri on, PhD, Dr. Kamal Shri Kumar, and one of the first posts. This is what got me thinking to do this. One of the first posts that came up on Twitter is like, yeah, I like you guys, but this guy's been wrong all year. It's like, you can be wrong. You could have a really long track record and sometimes be wrong and sometimes be right. And I want to point out that some of these really smart people have gotten stuff right and wrong in the same post sometimes.
Not Bob, but Bobby and I have always been right every single time. Right. But some people are wrong sometimes. Right?
Yeah. What's up, Remo? But anyway, I'm going to try my best to keep up with the comments as well. But we're going to be putting these things up pretty quickly because I got a lot of them. So the first one, Luis, if you could, is post number 1 and it's from unusual. No, this is right. You're right, Luis. That's correct. The Golden Age. This actually got tweeted out today, Jim. You retweeted it.
Yeah.
And I wanted to get more your feel on it, but I have a couple comments about it. So this is from the Golden Age, and he specifically asked us, and you guys got to remember, you can do this, okay, to comment on something. It says the big, beautiful bill kicks in January 1st. It's supposed to lower taxes and help taxpayers keep more of their hard-earned money. If Governor Porkchop, he means Pritzker from Illinois, if Governor Porkchop decouples Illinois from federal tax policy, how will that impact residents and small business? We talked to Bianco about this on our regular podcast. Jimmy, what do you got?
So I'd say this. If someone was drowning and had taken his last breath and was 4 feet underwater, and you threw like a couple 100 gallons of water on him, this is what that is. Like, would this matter? Yeah, it would matter if Illinois wasn't completely up a creek in an unsustainable fiscal situation. And the only things that keeps people buying Illinois bonds and Chicago bonds is an implicit federal backstop and guarantee. Otherwise, Illinois would be drowning far, far worse. By the way, change tax policy. Yeah, we all know this. If you have $2 in your pocket, you know that the state of Illinois government is coming after 1.5 of those. It's what should I think of this, Bobby?
Well, we talked to Jim Bianco on Monday. We did a live show with him that also will be reposted as evergreen content. And he mentioned he's in Chicago. We all know how smart Jim Bianco is, and he lives in Chicago. And he mentioned how Illinois has a constitutional responsibility to backstop Chicago. So as Pritzker decouples from federal tax policy to address Illinois' budget deficit, he's going to have to go to businesses and to individuals and up real estate taxes, potentially up state taxes, to backstop all the deficiencies that they have. So pulling it away from the federal government, which is not doing well either by strict financial terms, right? I think there's going to be a fight to sort of decouple from the federal side to Illinois into any sort of backstop. I don't think they can do it. I think this is really just a sort of I'm going to run for president as a fat guy move by Governor Pritzker. But if there's any success to it, it's going to hurt the residents and businesses of Illinois.
Yeah, and they're already getting kicked around. By the way, so one of the things I always preach about, and I will again, is autonomous states. Okay, because if there was autonomy and we didn't live in a bailout culture, 20 years ago, the bond market, the municipal bond market, would have forced Illinois to fix its problems. Instead, it just made it worse and worse and worse, and now it's an untenable situation. So now guys like me are even saying, well, God, I guess I hope the federal government does bail us out, which those are moments that I have that thing, because otherwise I think people should lie in the bed they made. Anyway, here we go.
All right. So the first one we got for the next list of tweets, this one, post number 1, Luis, was posted in, when was this? January 10th of 2025. And this is Unusual Whales, who we all know. You can see that the tweet had 219,000.8 views at the time that I grabbed this screen capture.
You know who Joseph Wang is, right? Fed guy.
Yes.
Yeah. Okay, good. Yeah.
Yeah. Somebody, that's why I took the first couple of comments. Who is Joseph Wang and why is he so delusional? As I read this, Jim, why don't you talk about who he is?
So he's a Fed watch guy. I believe his Twitter handle is Fed guy. Extremely smart guy, it seems like to me. So I hats off to him to the no recession part of it. I was a recession, but more of a bull in the stock market, if I remember correctly. What do you think, Bob?
Well, he was pretty good on his prediction because, again, this was early January. He predicted what would happen for the year. No recession. I mean, we can say that we probably don't know yet if there was no recession, but we can also say with a high degree of confidence that there wasn't a recession in 2025. We didn't have the typical definition for sure because the third quarter was not a negative GDP, the historical definition of it anyway. He also talked about a 5,500 S&P. I'm just looking at the S&P futures.
Yeah, was that a good bullish call or no?
I don't know. I mean, I guess it's a low but safe bullish call because we're sitting at 67.78 right now on the futures. I don't know where the actual cash S&P was, but they're pretty close now. 4% 10-year, not bad. It's at 415 right now. So remember, this is a 12-month call. So this is why I say, no, we're not really, shit talking anybody here because that was a really good call. And then 3,000 gold, weak again, but still that's a bullish call.
That's what I was going to ask you. Is that a bullish call? I don't remember a year ago. I barely remember yesterday what I had for dinner.
No, I mean, we can even look at it real time here. If you're looking at gold futures at the start of 2024, they were sitting at, let's see, January 2nd. Well, that's 2024. I should go to the end of 2024, shouldn't I? Yep. 2,600, 2,700, right around there. Okay. So he expected to go to 3,000. He wasn't wrong. We can say with high degree of confidence that he wasn't wrong on this.
The next day it went to 3,000.
Yeah.
So what do we grade Joseph Wang on this? I'm giving him a B+, A-.
Yeah, I totally agree. Look, if you say something to me, okay, this is me. If you say something is going up and it goes a heck of a lot higher than you said, to me, it's a victory. Like, that's a pretty good result for what you're looking at doing here.
I will say one thing that I do disagree with, because one thing I've been saying for the last 8 months, and this might be a cope because we didn't get the recession that I kept thinking we will. I still think that 50-60% of the people in this country are in some level of recession. It's the most bifurcated our economy's ever been. Yes, K-shaped recovery. I'm sorry if you guys are sick of hearing it, but I believe that's what's going on.
No, I like that, except I hate to use this phrase, but words matter. To me, recession has a definition, and it's a broad economic word as opposed to I'm in a recession and you're not. So I don't disagree with you. I know what you're trying to say, and obviously I agree with you. Let's go to post number 2, Luis, if we could. This is from Elite Options Traders. Elite Options Trader.
I don't know this person. Do you?
By the way, no, but if you're watching us, if anyone likes this particular person on X, formerly Twitter, let us know. We'll try and reach out to him. We'll try and talk to him. We'll try and get him on the show. There's still $7 trillion sitting on the sidelines with the stock market at all-time highs. The second half of 2025 will be much different than the first half. He's not wrong in that.
No, well, yeah, this is pretty proficient. I mean, prescient.
Right, we will see many new all-time highs in tech stocks, including NVIDIA, Meta, Microsoft, Netflix, and growth stocks like Hood, Palantir, and Hims. I don't think he's right on all of those.
What's the Hims? Hims is like boner medication?
Yeah, it's boner and hair restoration medication.
Got it. Yeah.
Testosterone injections, stuff like that.
Shit that guys like us don't need.
Yeah. Now, if you look
Yeah,
at
I'm just kidding. I'm kidding.
if you look at his call, second half, we'll see. I believe on all of those we did get new all-time highs.
This is
I
this
just
is an
think we're
A
not
plus.
still getting new
Okay.
all-time highs, right?
Yeah. Yeah. This
When the
guy,
Fed cuts rates,
that's an
go ahead,
amazing. Oh,
Jimmy.
you keep going. You keep going. Fed cuts rates.
When
Yeah.
the Fed cuts rates this year, we'll see people getting out of bonds and back into stocks. Lower rates equals cheaper money, so it'll be cheaper to borrow, which benefits businesses with lower debt costs, lower credit rates for consumers, and more incentive to move out of cash and into risk assets. Higher valuations for stocks will be justified as well because lower rates means future earnings are discounted less heavily. So this will be beneficial for stocks. That's that less competition when rates are lower thing, right?
Yeah. Yeah.
There's going to be a big opportunity coming the second half of 2025. Get ready and be patient. I don't think he had to be patient.
No. Yeah. I say no notes on this. This guy gets an A plus with me. Anything there that you even can pick apart?
No, I have no
me neither.
intention to, too. I mean, he was right basically through the third quarter, right?
Yeah. Yeah.
And we're getting a little bit toward the end of third quarter, beginning of fourth quarter. We're getting a little bit of
now we're
pushback.
getting a little skitty, but yeah, right. I
All
like
right.
it.
Post 3, Luis, if you could. I'll continue to retweet our show here real quick. Before I read this one, if you can see it, go ahead and read it. But otherwise,
okay, I can. You ready?
Yeah, go ahead.
This is from Afshin Amrani, MD, FACC. I don't know who he is, but he said my market outlook is very similar to Dave H. Contrarian, who I don't know him either. I believe he's directionally correct. He says phase 1, the final melt up between March and July of 2024. What does that mean? 2024.
Yeah. Keep going. Yeah, okay. If you want to go down to phase 2 and just read that.
But well, he also says S&P 500. I think he put the wrong date on there, right? So I think
Well, no, because he's got the second half below that.
Oh, okay.
If so you look at the date of this,
I'll go to phase 2. That's what's more important from late 2024 to 2025. Okay, stock market collapsed by 80%. Okay, S&P falls from 7,500 to 1,500. Okay, so this guy, and again, I don't mean to disparage anybody. If you truly believed it, that's fine. But this sounds like clickbait bullshit to me. Like he wants to again, you can predict all these things, and if you're wrong, whatever. You fade into the night. But if you're right, you just put it in front of everybody's face. So none of this happened. He says S&P falls to 1,500, NASDAQ to 5,000. Dow to 10,000. Geez, guy, we talk about aggressive. Liquidity dries up, leading to a full-blown panic. Auto loans, housing, commercial real estate crash. Auto loan default spike, mirroring the 2008 subprime crisis. By the way, it can't mirror the subprime crisis with auto loan default spiking. It's a car. It moves quickly. The real estate market, it takes months and months and maybe years to unwind. He says commercial real estate crisis worsens as office vacancies remain high. True. Federal Reserve responds too slowly. Well, you agree with the president. Fed will hesitate to cut rates aggressively, worsening the downturn. Global debt crisis emerges as countries struggle to service debt. Gold falls to 2,100 before rebounding later. Silver crashes to the $20. Do I need to even comment on this, Robert?
No, I don't think so. And the funny thing is I'm looking at his profile right now, which, by the way, is at AFSINE Imarani. I'm sorry if I'm saying that wrong. He's a doctor. He's a cardiologist and an intern. His biologist is cardiologist, internist, Jew, Zionist, Japanese antiques, and then crypto, Bitcoin, Solana. That's where this comes from.
I believe you are right.
View comes from.
Yeah, everything else crashing.
Yeah, he's a big Bitcoin person. That's what it seems like. And if you look all the way down to the bottom of this, he's got a prediction through 2030, hyperinflation, complete reset. So this is absolutely what you just described it as. By the way,
he's a Bitcoin.
When I was searching for the most looked at financial tweets or posts, most of them were just reporting inflation. The inflation numbers came out, and this is what they said.
And what's fun about that?
Yeah, I mean, there's nothing to look at there. So if we just go to the next one, Luis, post 4, we're getting toward the end of these ones where I want to look at what people said, and we're getting into what people are predicting. But this is one of the, I think we have 2 more of these, I think. So this one, I screwed this up. Lower caps like RBNT and RWN moving even harder off their lows after being smashed. ETH might even catch a bid, still likely to chop for a bit. I want to jump down from that. So his prediction for the second half of the year, still some volatility to chew. BTH, ATH going higher into mid-year. Strong second half of 2025. All coins to make strong gains and fresh highs by. If I'm wrong, I'm wrong. I'm not sexy being a bull when everything is in the shitter, but that's how I see it shaking out.
Okay, so this is obviously a crypto person who thinks that everything else is trash. That's why everything he's mentioned here is Bitcoin, correct? I mean, it is crypto, correct?
It is crypto. And if you look at the date on this, March 14th of 2025, he was basically buying a dip. And he was right. And there's another one of these. I mean, he was right that it was going to go up from there, but he has no prediction toward the end of the year, which is basically what we're looking at now. So,
but also the whole when he says it's not sexy being a bull when everything is in the shitter. Everything wasn't in the shitter. I mean, there's a lot to complain about of the economy, but to have that opinion, that's what people gravitate to crypto if they think that everything's in the shitter, and then everything they read on social media reinforces that. I just am not of that belief. So this guy I give a D+ to.
Yeah, and I think that's part of what we're trying to do here. We're not trying to call people out. We're just trying to say that, look, you need to learn to separate this stuff. Some of this is valuable, some of this is not. Some of this is people talking in their book, like the cardiologist that we just looked at 2 of these ago.
Actually, I give the cardiologist a D+. I give this guy a C-.
All right. So this one is actually really good. This next one, I think this is post 5, Luis. Yeah, this is the one. Now, this one's hard to read. So I kind of want to put it up here, and I'm going to go through this in bits and pieces. This is somebody named Warren Pies, which I immediately wanted to go buy a pie. When I saw that name, I got hungry for pie. S&P 500, 6750 and rising. We got to look at the date of this. This is November 25th, 2025. So we're starting to look at sort of end of the year into 2026 prediction.
Okay, so this is November, so it's not as great. I thought he was doing this at the beginning of the year. He's doing it in the fall.
No. Okay. 6750 and rising. So we're already rising from there, although we're falling back to that level now. Second half of 10-year yield, sub 4% and falling, not happening. Oil breaking down, that is happening.
Yep.
And gold heading above 4K, that already happened. Now, from there, he takes us to an excerpt from @3F_research. Okay, this is an actual research shop. Second half 2025 outlook. This was published in June. And then on December 1st, they're going to publish their 2026 outlook. I could not find that. So it's nobody's retweeted it yet. So what we're looking at for this particular second half is the economy avoids recession, but suffers a growth scare in late Q1, early Q2 2026. Okay. However, we maintain our no recession call. Actually, I've got that wrong. This is for 2025. But I maintain my no recession call for the second half. So he's right on this. And this, again, is not the person who posted this. This is @3F_research that posted this. And also, by the way, they posted this in the middle of the year. This person was just retweeting it.
Right.
All right. So this is a call for the second half of the year. The Fed attempts a hawkish pause early next year. This pause is ongoing, but the doves are winning the war. We expect the Fed to start cutting in September.
Nailed it.
Yep. The Fed cuts 200 basis points. We expect 75 basis points.
That says 100, Bobby.
That says 100?
Yeah, he's still damn right. Yeah.
You could read it better than I can. Why don't you read the rest?
Because I made it huge on my computer.
Yeah, anyway, I can't do that here because I'm also looking at other stuff. So read the rest of it, starting from
then says S&P 500 finishes the year at 6,800. Nice. But suffers a first half down draw of 10%. Okay, that's when you take a 6-month period after the 3 years of rallies and saying we're going to have a 10% drawdown. That's not much of a call, in my opinion. But again, the other stuff has been fantastic. So let's keep going. Our year-end S&P 500 target stays at 6,800. Sentiment has been reset as we had hoped. Mid caps outperform small caps. Bobby, I never look at mids.
I don't think that's happened.
I don't think that's happened either. This has worked, and we expect small cap underperformance to persist into the second half of 2025. No, that's not true. It did not happen. Oil breaks down below $60. Nice job. This also it already has happened. Despite the geopolitical noise, we expect oil to again break below $60 in the half of 2025. The 10-year averages less than 4%, and breaks below 3.5%. By the way, are we sure he's predicting this is about half two of 2025, right?
Yes.
Yeah, it is. Of course.
You look at the title of it on the top.
Yeah, now I see that. Right. It's less than 4%, breaks below 3.5. That did not happen. While we've been directionally correct on yields, this was too aggressive. 10-year yields will break below 4% in the second half and will average close to 4.1. Okay. He rallied pretty good. Gold hits 3,000. Check. Still bullish gold, raising year-end target to 3,500. As Bobby said before, that was a pretty good call at the time.
Yeah.
Yes, we blasted through it. I don't have a lot of people saying it was going to 4,300, except for crazy gold bugs like Bobby and I. Anyway. Yeah.
I'm just looking him up or her up right now.
It's familiar to me. I might follow this guy, Warren Pies.
Well, remember, Warren Pies is just retweeting at 3F's research.
Oh, at 3F research. Yeah.
Yeah. And I think what Warren Pies was doing is he was showing how good these guys did. And he was sort of like previewing that they have their 2026 outlook coming on December 11th. So, but I can't find at 3F _research. It's not coming up on my Twitter.
If anyone does find it, send us to it, because these guys seem pretty good.
I'm not seeing it. Just doing one last search here.
So
Warren Pies is the founder.
Oh.
Okay, so I just followed both of them.
I followed him as well.
It's 314 research. So I'm following them both.
Because you guys,
Warren, if you end up seeing this because we followed you, we gave them an A+, right?
Yeah, I gave them an A+. Sure, they did great.
All right, I want to actually, damn it, Luis, click on post 5A. I forgot that I did this. I expanded it and just left the actual tweet out of it. So this was the actual piece of research. So it's the same thing.
Yeah.
And you can see that the date on this down at the bottom was June 26th of 2025 for this particular research piece.
Nice.
So that was a good call. All right, we're getting into the predictions for next year, I believe. Don't quote me on this, but let me just see which one we're doing next. Let's see, post 6. Yeah, post 6 is a December 10th. First half bearish carry unwind, defaults slow down, joblessness, which impacts credit approval mortgages and loans in general. We'll get a mild deflation at this time. Second half of 2026, Trump accounts huge inflows of capital into SPY, SPX, Fed govs rotate out.
The Fed, like Powell out, Hassett in.
Oh, okay. New Fed chair, faster and harder cuts. I mean, this seems like, yeah.
I like this call completely. I don't know. I do believe that that we're having a jobs problem right now that could show its head as something, relatively ugly in the next few months. I do think it'll be met with Fed liquidity, and it'll run into deregulation, investment potentially coming in. Was that on this show or the one we just did before when I said when Trump says 21 trillion? That was the last thing we did.
That was this show.
Yeah, was it? Okay.
Or was it the rundown?
Trillion?
I don't remember.
It was in the rundown. So Trump says 21 trillion of investment coming in. Of course he's exaggerating. He's Trump. He's in some ways a carnival barker who I support. But if 10 trillion is the real number, that's still significant. So I think that we will run into that after Q1. So I like
real quick. We gave Warren Pies an A+, right?
Yeah, an A+.
All right, I'm just letting him know that.
Yeah.
And I want to give him a copy of the show real quick so he can take a look at it. This is a little bit of a not a troll, but an actual research project of my own to get some new people for you guys for next year,
and to see who's good and smart.
So go ahead and send them that. All right, let's do the next one, which is going to be what's the next one, Luis? I don't even know. I'm not looking at my stuff here. All right, the great Martis.
I know he is. I think I follow him.
Maybe you follow him. 2026 predictions. Do you want to go one by one?
Well, yeah. Okay.
All right. Gold 7,000. I'm going to say no.
I'm going to say gold 5,500.
Okay.
Silver
100. I think that's possible.
Well, silver's certainly got a bug right now. I'll say silver 80. So yeah, I guess that's the same page. I'm just being a little more conservative.
And again, this one was viewed so far 698,400 times. You can see that on the bottom. This is October 18th. I will say, Jimmy, real quick, a sidebar here. Do you see any headwind for silver from the EU leaving their internal combustion engine ban? They're getting rid of it. They had an internal combustion engine banned by 2035. You see any headwind there?
No, in some ways you could say that's a tailwind because the electrification thing is dependent on silver as well. But I think that's not the story. By the way, bullshit that they're not. There's going to be internal combustion cars. You can shoot yourself in the foot, but you don't shoot yourself in the same foot 5 times. And that's what the EU would be doing by doing this. So I think cooler heads will prevail.
No, they're pulling back on it. They did say they were going to pass the ban of ICEs. They're getting rid of that now. They're going to let them.
Oh, okay.
They're going to focus more on hybrids.
Yeah, I don't think that's a problem because I think data centers are the bigger deal with silver. So
okay, Dow Jones 34,000 conservative.
So where's the Dow now?
The Dow, I'm going futures 48,292.
Okay, so he's calling for Armageddon in the Dow and the Nasdaq, right?
Yeah, and I guess that's the gold and silver call there, right? Which I don't think silver gets to 100 if you get Armageddon in the Nasdaq.
Yeah, I do. You know, I've said for 3 months that I expect sometime in the next 18 months, well, 15 months now, because we've 3 months in, that the Mag 7 will have a 30% haircut. That probably brings the Nasdaq down 20%. What is the percentage loss that this guy's talking about? Because I think this is starting to sound like clickbait to me.
I mean, it's easily 10%, isn't it?
I think it's more than that. I think it's probably close to 20. Give me 1 second. You talk, just jabber like you do, and we'll.
Oh yeah, it's more than 10% because 48,000 drop. 10% would be 480 or 4,800, which would not take it there. It would take it to 43 something. So it's around 13-14% at least.
Yeah, I think it's more than that.
And he's saying conservative. That's the funny thing. He's saying that's a conservative drop.
Yeah, no, so to go down to 1,500 would be 15,000. No,
4,800. Dow right now, the futures are 48,284.
I'm talking the Nasdaq. Bobby, the Nasdaq is trading 24,727 with a 26,000 top. So 26,000 losing 11,000. Yeah, that's like 43% of its value. So
yeah. I was still talking about the Dow, but I get you.
Yeah, no. So I left the Dow because the Dow was like I said,
fine.
He's saying too that I think what he's saying is in the madness, there's going to be a rotation way out of NASDAQ, and that's going to be a little more supportive of the Dow and probably the S&P who didn't put it in there. I actually do think there's going to be some turbulence in the NASDAQ, but not to the tune of 43%. I'm not with him on this.
Okay, and the regional banking crisis, that's obviously the trigger for it all.
Yeah, I guess could happen, but it's just going to be met with the Fed opening their window. They did it once before and flooding the system with liquidity. Just look at the chart of the Fed's balance sheet back in March of whatever the hell year that was. Is that March of 2024 or 2025?
2024.
Yeah, when SVB problem happened and boom, all they did was come in and save everything like they always do. So this guy, I hope that he's partially a clickbait, and I hope he's not a good data scientist that is really have him come up with these things. And again, if he's right, I'll bow to him. But I think this is way too Armageddon-y.
By the way, Widge has put the 2026 stuff from 314 Research into Twitter. So I'm reposting it if anybody wants to see it. Maybe we'll look at it in a future show. I'm going to certainly look at it personally.
Thank you, brother.
All right, the last one I think is funny on here. I don't know who Carlton is. Carlton to finish in the top 8. But iPhone 18, same as iPhone 17. I think that's a funny one.
I think it's funny too. Right?
All right, Luis, let's go to number 8. Again, we're into forward-looking posts. Now, this one, again, is, I think, a little bit, I don't know. I mean, a little bit in the weeds for us, I'd say. But I just went through let's just go to the conclusion. I just went through every major asset on the highest time frame. It's kind of a Mike Arnold thing. SPX, NDX, DJI, TLT, DXY, Euro US dollar, gold, oil, BTC, XLF, the financial ETF.
Yeah.
They all blend together, suggesting the same thing, a 20 to 30% correction in equities in 2026, followed by a 50+% blow off. Doesn't mention crypto in here anywhere.
Right. I actually I don't hate this. 20% and 30% are different things, obviously. What a 20% correction in stocks that doesn't that happen like on average once every 3 years or something like that? Ryan Dietrich, if he was here, he'd know it for sure.
Yeah, it does. It touches down there, and that is not like when you have to surpass 20% for us to officially say it's a bear market. As a matter of fact, we had it last year. We had a 26% drop.
Yeah, so in April, and we ended up having a great year. So I actually think this looks a little clickbaity, but I'm going to say it's not. It's not clickbaity. I think.
Well, I'll read something else so you know it's not clickbaity. This isn't just a hunch. It's derived from my Elliott wave counts and confirmed by overlapping macro structures across nearly every chart I track. So he has a reason for saying it.
Okay.
It's not so that it can accumulate more than the 25,000 views it already has.
Okay. This is interesting, maybe. Let's take a quick timeout. I need 1 minute of your time. Luis, can you put up the banner? So, guys, this is the part of the show where I ask a favor of you guys, and I totally appreciate all you do for us to begin with. One more thing. Please try Tradier Pro. It's going to end up being a favor to you. Just scan that code right there. It is the elite options trading model. We talk to people who've been trading options for decades, and those who've been trading it for days, and all of them say that it is tremendous value to be using the Tradier Pro. So please click in there, do 3 months for free. We'd appreciate it if you do. Thank you.
I want to put up 2 comments before we go on to the next one, Luis. One of them is it's Stock Chart, our friend Remo saying, do you see tonight's Trump address to spark a Christmas rally? I don't know if you'd call this a hot take or not. I say without the Rob Reiner comments, it was more possible than with the Rob Reiner comments, because people are just going to be like, there he goes again.
Yeah. So I think that I hate when presidents' speeches move markets, and they often do, and they did with Trump. My sincerest hope when he began his second presidency was that we'd be numb to his comments and not do it. He talks about getting a new Fed chairman in and lower rates. Stocks respond to that. He actually has the power to do that, so maybe they should, and I picked a bad example. But a lot of the things he says, like if Trump says, the tariffs brought in $156 trillion of investment. That's kind of the stuff he does. So I'm hoping that we ignore him, and I believe we'll ignore him. What do you think?
Yeah, no, I agree with you on that.
Yeah.
I mean, obviously, I think it's a different scenario now that there's people who support him dismissing a lot of what he says because of what he said last week. And I tweeted out immediately as I saw those Rob Reiner comments. I said, this is not smart politically or morally to put those comments.
It was a bad take. Unforced fumble. And I just don't understand why he does those things. And for people who are watching, I'm critical of Donald Trump when he does things poorly. But I'd still vote for him over the binary we were given back in November. But I still think this is just so dumb. Why doesn't someone tap him on the shoulder and say, be gracious, be kind, be compassionate? Wait a week and then talk about how Rob Reiner had Trump derangement syndrome, which he did, and try to finance people who were trying to put him in jail, which he did do. But anyways,
I'll appeal to the basketball coach in you. It reminds me of when somebody brings the ball up to the timeline, right? Stops and then starts dribbling again. It's like, what are you doing?
What are you doing exactly?
Why would you do that?
It's an unforced mistake. Yes.
An unforced mistake.
We have plenty of forced mistakes. Let's not do
except in the NBA where you can do that as long as you're stepping back under the 3-point line.
Exactly right.
And then I want to put up Widge's comment. I already mentioned that Widge posted the next set of data from 3F Research. And so, again, I reposted it. I'm sure Jim will later, too, if you guys want to see that. Jim put that Widge put that 6% unemployment rate. That could happen without a recession if public assistance benefits are tied to employment.
Is there even talk of that?
Yeah, there is.
Okay, that's interesting.
There is. I don't know I don't want to pretend like I know what the political workings behind that is. So.
Me neither, but I guess what he's saying is that people would then have to actually file for unemployment and be on the rolls if they weren't getting as much public assistance. Right. And that's interesting. Thank you for that, Widge. Yeah.
The next one is post 9, and I want to actually just go to a certain part of this post because it's more the same, Jimmy. Yep. You just got these clickbait numbers, gold at 9,100. I would love that. So would you, because we have a lot of gold. Silver, $112. I want to go down to copper here. So if you don't know,
you skipped Bitcoin, 29,000, meaning that everybody's dumping their Bitcoin. But anyway, go on. Yeah.
You could see the NASDAQ dropping as much as this guy thinks. Yep. I can't see the Dow at 5190 unless it was a 51,900 with Bitcoin dropping to 29,000 because of the accelerated sell all the equities activity. But INR crisis, for anybody doesn't know, that's the Indian rupee. I don't know what that's about. I don't follow that really close. But the copper at 1,500 rupees, which is $16.60.
Okay, because I was going to ask you to do the conversion, but you already did. Well done.
Yeah, I did it already, knowing it would happen. So
Yeah.
I didn't know it either. But that's $16 copper. What do you think, Jimmy?
We're at $5 now?
Yeah.
No. Okay, because a triple in copper, a triple in gold and silver means we're embarking on some sort of hyperinflationary event, or at least a currency crisis. I don't think that people are going to flock to something that's way more industrial than copper. So I think if in the situation that copper was tripling, I'd sure as hell not want to be long copper, but want to be long silver and gold, because that means those things are quad, cinco, whatever 5 times 6 times is. Those things are going to explode even more. So I don't love everything else. I think is interesting. I think it's hyperbolic. It's over dramatic. And as you know, I disagree with all of it, but directionally, I don't think it's terrible. But so I guess, is the crisis coming in India and then it's spreading and having everybody go to gold? I don't understand what he's getting
I
at.
don't know. I mean, like when you look at this, I think that there's things that don't line up. Like, I don't understand how you get a $1,600 or a $16 copper with gold and silver at 9,100, 100. That's hyperinflation.
Yeah.
To see that with a still strong domestic economy. It just
But if copper, unless we're doing the conversion run, but if copper's at $16, silver's at 200.
Right.
Yeah.
All right. The next one is actually again from Warren Pies, who makes me want to buy a pie. And this is a Jimmy Iuorio specific one. Big divergence between the markets and the Fed. 2026 SOFR equals 2.85% Fed funds rate. 2026 Fed projection 3.6% through June through September. What do you think?
So what he's saying is that Fed projection is for 3.6 rate, but the SOFR futures are saying 2.85. Is that the way you read this?
That's the way I read that.
So again, I would much rather go. Well, no, you know what's funny is that I always used to say that the market was smart, Fed funds market, SOFR market, in predicting the Fed, but they've been wrong for several years. They kept pricing in very, very overzealous and enthusiastic rate cuts that never really came. They still could be doing this right now. So I think that let's meet in the middle of those two things, because I don't trust the Fed's own projection, because the Fed is not the greatest prognosticator of what they're going to do any more than 2 weeks out of what they do. And they're the ones actually doing it. So I say no to both of these. I say somewhere in the middle. What do you think?
Okay, that's fair. Again, I put this one up specifically for you. I don't watch SOFR as much as I used to.
Sure.
So I don't really have an opinion on it.
Right. No. So that's
let's see.
Right.
I want to make sure and get through the rest of these. So let's go to number 11 really quick. If you ask me, it's likely we'll see HIMS. Well, you know what? This is very stock specific. I think I'm going to skip this one if you guys don't care. But the crypto mining sector will pump. So this, to me, as soon as I see pump, no offense to you, M matters, but it's full of like these sort of crypto words.
Buzzwords, right. Yeah.
Yeah, I can't. I told you I'm interviewing Natalie Brunell in an in-person event down here in Southwest Florida. I can't wait to ask her how she feels about the "it cannot possibly go down" crowd.
Please.
I think I know what she's going to say.
Because Natalie's smart and she's a great guest. So hopefully she's logical about that, and I think she will be.
All right, straight commodity one on post 12, Luis. The commodity bull market of 2026 is set to be stellar. Our weightings, 30% gold and silver, they think is going to rise by plus 200%. Now, I don't know if they think that this cycle is going to be continuing 2026, or if they're going to get a 200% gain out of that particular allocation for 2026. I'm not sure. This is cycle bottoms at bull returns. 28% uranium, 100% gain. Lithium, 400% gain. Copper, 5%. I think copper should be higher here personally if uranium and lithium are going. And then 13%.
Oh, no. Copper says 200%. 5% is his allocation.
Yeah, no, I think the allocation
should
be higher.
Yeah.
Personally, I think it should be higher than uranium if you're expecting to get a 200% move out of it. And then he goes down to the Kobayashi letter, which I didn't read this particular one, but that's the letter from August 30th. I put it in here specifically because I didn't want to take credit away from Kobayashi if they were a part of this.
Right.
So what do you think on these? I think it's a little Little
Well,
bold.
okay, it's bold. I agree directionally. This is someone, engagement farming, which by the way, like I don't say that like it's a negative thing. I've engaged
Nothing
in
wrong with it.
farm when I'm bored too. But this seems like a bit of engagement farming. I agree with him directionally. I think the commodity bull is intact. And if you read Lawrence McDonald's book, How to Listen When Markets Talk, he lays it out beautifully. And again, I was a commodity bull before that book, but he said commodities in a situation where there's persistent inflation. And I think the Fed wants inflation in the high twos for 2026 and maybe even 2027. I'm sure as hell not getting out of my gold and silver, particularly when I have the president who in the same day talks about throwing $12 billion to the farmers, throwing $2,000 to you just for fun. Those are things that are the debasement trade is alive and well. And I like my commodities. You?
Yeah, the only thing, like the first two, A and B, I think the returns next year are likely to be the percentage that they have as allocations.
Which would be fine.
That would be great.
Right.
Obviously, lithium and copper, I think, are probably going to return.
I don't have lithium's the only thing I don't own in that list, except I don't own potash and coal. Yeah.
All right, post 13. I don't remember this one, to be honest. Lark Davis, the S&P 500 is up 16. But what's the date on this one? November 29th, so not that long ago. The S&P 500 is up 16.7% this year, and Wall Street is calling for another green year in 2026. Here are Wall Street's predictions. So this is just a guy doing a service to FinTwit, right? So I'm going to ask you which one of these you agree with. They're pretty similar. I'm going to take the easy way out and say I agree with JP Morgan because that gives me a range for the S&P 7,500 to 8,000. No one in here is bearish, which I find a little funny.
I find it troubling, which by the way, I don't think many people were bearish to start 2025 as well. Does your memory lead you to that same thing?
Yeah, it does.
Yeah. So again, I'm bullish too. The range I'm much more comfortable with the range 7,500 to 8,000. I think it's chaos theory to try to when there's so many different inputs to when the stocks start rallying, buying begets buying to pick an actual level. I think it's hard to do, but what's 7,500 to 8,000? They're saying like that's a 10% to 15% rally. Is that about right?
Yeah, it's about right. And also, the analysts, I've always said this about analysts, they're not trading this stuff. So just put a number out there. And if it moves, you could just move your number. Yeah, exactly. Real quick, if we could, Jimmy, I want to put up Tracy's comment here, Luis, because she was referring, I'm sure, to the last post. She said oil, gas, copper stocks go next year. And that's obviously rocket ships, so higher. But I want to ask her if she's still listening. Do you mean the stocks go higher, like the inventories go higher, or the stocks representing these things go higher?
I think she means the latter.
I do too, but I just want to clarify because if stocks are going higher, that means the price is likely going lower.
Yeah, no, I'm assuming she means the latter. And I'm looking, by the way, oil is a chart I keep up every day for just the beginning movement of its breaking out of this, getting the crap kicked out of it. Trade for the last couple of years.
Luis, she clarified, if you can put that up, it's exactly what Jimmy thought it was.
Yeah, that's what we thought, Tracy. Yeah.
Let's go to post 14, and then I got the surprise one for you, Jim.
Okay.
This is from Iconic XBT, and I did want to include crypto in here. When I did the search, a lot of the most watched or most retweeted and viewed tweets are crypto guys. And one of them had it had like 1 million views, was a guy in a bathtub with his legs crossed, looking out over an ocean with his chart screen up above his bathtub.
That was me.
Like, what do you think of my trading setup?
You didn't know that? You didn't know that was me?
I didn't know that. Those were longer legs than yours or mine. So
okay, good.
I knew it wasn't one of us. Okay, the second half of 2025 will be more bullish than anything you've ever seen this year. Wrong right there. But here's the part most won't expect. That's also when the crypto market tops. So maybe his just timing was off a little bit.
Yeah.
Late 2025 or early 2026 at the latest. Peak euphoria is the exit signal. I've said it now. Don't cry when it plays out. Follow me or get left behind like the rest. It's 43,200 views. Not wrong?
No, not wrong. The question is crypto toast? It's had a very, very difficult time. Today was such a weird day. So much buying, then so much selling right afterwards. Okay. So here's what I would say. You and I have both said that in 10 years time, we think there's an extreme likelihood crypto is either going to be 1 million or it's going to be 0. I think if I had to make a bet right now, gun to my head, I'd make it that it was closer to zero. Although I am long Bitcoin in case I'm wrong, and the risk reward profile favors being long it. If I think it's the chances of a million, even if that's only a 30% chance, well, I'll stay in it in case it does, because that'll indicate some real troubles in other places. So
I will tell you
don't
this.
mind.
That I'm looking at the price of Bitcoin to the US dollar on one of the major exchanges. And if I were to, you had a little bit of a bull flag. It was sloppy, but it was there. Okay. That got broken down from, looked like it was on December 14th or 15th, right? And the break where it broke implies a price of about 77,250 to the downside, if that particular pattern were to play out. And that's not disastrous.
No,
I don't think.
I'm
I think
still
it's,
up money.
it's
I'm still up money at 70,000. So yeah.
So it's not disastrous, but, and I talked to a lot of crypto people lately. And Luis, while I'm saying this, can you put in Tracy's next comment? Because we might want to, no, not that one. This is Jim's surprise one, but it's already up. Tracy's comment in the commentary there. We'll be in a structural deficit in copper starting next year. I thought it was already this year, Tracy, but I trust your view of that more than.
I believe we're already there. And in silver and in copper, the demand is above what's being mined. The environmentalists are keeping mines from expanding and new mines coming online, even in places like Chile. It's been one of my main theses of copper. As you know, I was bulled up to my eyeballs in copper, but I had it on in what I thought was a synthetic representation with the miner. And guess what? There was a big problem with that particular miner that spiked the price of copper, and that stock went down. So I'm not going to make that mistake again. But I agree with Tracy. I think we're in a
she's not only wicked smart, she's one of our favorite human beings on the planet.
She's the best. Yeah. Thank you.
All right, Tracy. Let's put up the surprise post, Luis, that I already screwed up and had you put up already. This is Adam Taggart talking to Steph Pomboy today. Unemployment rate to spike in 2026. Now, Widge already commented on it. I don't know what spiking is, but I guess from 4.6% to 6% is sort of a spike, right?
Spike. Yeah. And by the way, I agree with Steph on this, and I've been saying it quite loudly too. I think the effects of AI are just beginning to be felt. And I think that it's one thing for Bank of America to say they're replacing their HR department with AI, and they do so loudly to make it up to boost their stock price. But when local law firms, local accounting firms start not hiring people because they think, whether or not they're right about AI being effective replacement for people, that's still another equation to be solved months down the road. But right now they think they can be more efficient without people. And I think that's having a drag. And it might get to a point where the layoffs lead to more layoffs and demand starts to go down, and then we need to address it. But it's not that unusual for really, really disruptive technology to hurt the labor market in the short term. I believe in Adam Smith's visible hand in the medium and long term, but in the short term, it could be hurting the labor market, and I think it will. So I'm gonna defer to Steph. And by the way, love Adam Taggart, love Steph. She knows that too. So what do you think?
I mean, I think, we've talked about this ad nauseum. And while I'm saying this, Luis, can you put up Tracy's last comment, please? I'm going to read that real quick before I comment on what we were just talking about. Silver is going on year 6 of a structural supply deficit. AI center build out woke the market up. 3 years too late, but here we are. Tracy's cool enough to use shorthand on text. I don't know if she was doing that there. Yeah. Or if she just forgot the E. She could be either one. I think in terms of the unemployment rate, I think one of the problems that we saw it was almost a mathematical, identical situation of the labor force participation rate going up enough to bring that 4.6% number out. It wasn't actually a much worse employment situation. It was some of the people who were not in the labor force coming back in. That may have to do with deportations.
Sure.
Supposedly we've deported 2 million people?
Yep.
And so there's jobs to be had now. And I'm curious if that's going to skew the numbers in a way that we don't quite understand at this point. No. So I'm not willing to make a bet on that. Certainly, I don't even know how I'd trade it. I guess prediction markets would be one of the ways that we would find that kind of a bet. Yeah. But I'm much more comfortable betting the Bears against Green Bay.
Do you think the Bears will be giving points against Green Bay now with Micah Parsons?
They are right now.
What?
Right now they are. It's 1.5.
Well, okay, I was going to say, yeah, okay, 1.5. So that means it's essentially
Wait a minute. Yeah, no, the Packers are favorites. The Packers are giving points.
Okay, so that's
Bears are
interesting.
getting a 1.5
because Micah Parsons out for the rest of the season.
He's gone.
But that's interesting.
Watson may be out for the game. We don't know yet. But people forget, like the Bears, and obviously we're done with these tweets. So if anybody else wants to stop listening to us, feel free.
We're going to talk Bears talk now. Yeah,
the Bears have had way more injuries and have been publicized because a lot of people don't realize they didn't realize the Bears would be something to look at.
Yeah,
like that they would be a decent team. And you look at it from that perspective, and you say, well, look, they've had number one players out. They've had as many as 7 starters out in any one game.
And most of them were on the defense.
Yeah. Now it looks like they're going to have Roma Dunze and possibly also Luther Burden out for this game.
Oh, geez. Luther Burden, he picked up the slack for Roma Dunze
awesome.
so well. By the way, do you notice, like, now that we're good and we have a good offensive line, like DeAndre Swift looks like a different person. Like he's trying to get the extra yards so much more than he used to. Luther Burden, make that one run where he caught it on the sidelines and made those 2 moves. That is focus. This is a team that's dialed in. And DJ Moore's a bitch. But that, by the way, that throw to the back of the end zone, either Caleb Williams is the greatest, or else there was a lot of randomness to that. And I
retweeted. I don't know if you saw it. Let me put Widge. Yeah, we'll be here 4:00 next Wednesday, Remo. That's true. And then put Widge's comment up if we could, and then I'll answer Jimmy's question there, or I'll comment on what Jimmy said. It wasn't a question. You're spot on, Bobby. For many years, conservatives and market skeptics have pointed to labor participation as giving us a fraudulent U3 unemployment rate. We're going the other direction. I think that's a fair comment.
That is fair. I like it.
What I was going to say about that Caleb Williams throws, I don't know if you've seen it, but I retweeted a couple times if you haven't. Joe Montana side-by-side comparison.
It's amazing.
Joe Montana, a lot of people think he was trying to throw it out of bounds, like out of the end zone on that play. And Dwight Clark was just tall enough to reach up and get it. So 2 funny things about that. Number one, Caleb's throw is about 20 yards longer than Joe Montana's. That's a positive for Caleb. Number 2, it was not as high pressure a situation as Joe Montana's was.
Clearly not.
So that's a plus for Joe Montana. Yeah. But also, if you look at them side by side, Caleb Williams threw about 20 yards further, and his ball got there a split second before Joe Montana's got to Dwight Clark. And I think that's why it didn't get intercepted, is because it was such a hard throw. Those guys couldn't react fast enough to get it.
Do you think that's who he was throwing to, or the front guy?
No, I do think he was throwing to DJ Moore because it was way over the head of the front guy, which he's done before.
Yes.
He doesn't overthrow people when he's rolling out.
Yeah, why?
He's actually accurate when he's rolling out in either direction.
I'll tell you this, if you people are watching too, like I don't think Caleb Williams is the greatest quarterback in the league, but I will tell you this. If there is one drive left to put us in position to win a game, I'll take Caleb Williams over every quarterback in the NFL except, well, Mahomes now, because it's hard to do it with that big leg thing. I know I've had my ACL, but maybe the guy from Buffalo.
I'll take Josh Allen.
Yeah. That's what I was going to say. Josh Allen. And who else? I take Caleb along with Lamar Jackson. You know what I mean? They're the same. I think that Caleb Williams is amazing because he uses his legs. He uses his ability to scramble when he does that. And it is a sight to see. And also, and again, Cole Kmet's from my town. We all love Cole here.
Yeah, Cole's great.
But Cole's great. But once you get a tight end that's really great, like Colston Loveland, you realize how valuable it is. I think Cole should be playing more fullback, while Colston lines up as a traditional tight end. And we do that sometimes. But I think it's going to be a fun game. I'm looking forward to it. And it's excited. When you guys didn't know anything about Chicago's, and the Cubs are good, 2/3 of the city that supports the Cubs love it. The third that supports the Sox don't. The one thing we all agree on in this city, no matter which town you're from, which neighborhood you're from, or what color you are, we all agree on the Bears, and I love when they're good.
It's a weird situation because when the Bulls are good, you have the hockey fans that don't care.
They don't care.
When the Hawks are good, you have the basketball fans that don't care.
Right.
When the Cubs are good, the Sox fans don't care. When the Sox are good, the Cubs fans don't care. Everybody loves the Bears. The city absolutely goes bananas.
It's crazy. Like when they're in the playoffs, like you'll go to the store and some old lady will be checking you out at the store and she'll give you your change and go Bears. And I'm not even joking. It happens all the time. Yeah.
And the Lions at the Art Institute get the Bears helmet, which I always love.
And that is cool. Yeah.
So,
anyway. All right. Are we done?
We are done.
All right. Thank you guys very much for joining us. This is Tradiers, the Trader's Edge, and a special edition of Bears Talk. Thank you for joining us. I'm Jim Iuorio. That's Bobby Iaccino. See you soon.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.